Let's bring in Alan Nuckman, Chief Market Strategist at Agora Financial, who's live from Chicago now for a bit more on how the VIX has been trading, Alan. I know that it was down about 1.7% last week. It spiked this morning. There seems to be a lot of volatility on volatility right now. How has that VIX index traded since news of this tit-for-tat trade war between the US and China?
Well, I would like to say this is another example of the market just doesn't care. So look at the action we had on Friday, very muted downward movement, marched back throughout the session. And the VIX was actually down on a day that started off very, very negative. Now today it couldn't quite get that same result, but we're still at the 12 handle. So the VIX is still at a very, very low level. And the stock market was stable once again today. We're talking about what, a 0.25% move on Friday and a 0.25% move today. So, this is a big deal because you think about it. We're in a trade war, no doubt about it, as much as people say it's not a war with China. Now India's coming on board. We're having problems with Canada, with Mexico, with the European Union, with Germany, and the market is still up 15% in the last 52 weeks if you look at the S&P and the Dow. And the NASDAQ, the tech sector, is up 25% in the last year. So the markets are behaving very, very well and really just shrugging this off right now.
I know you're always an ultra optimist, Alan, so I just want to get your thoughts as to what you would be doing right now. You point out obviously the NASDAQ and some of those tech stocks that have done well. The small cap Russell 2000 index has also been relatively immune to all of these trade tensions. There is the risk though. There's a lot of uncertainty right now. Yeah, new highs, as you say. A lot of uncertainty though, obviously, with these trade wars. A lot of people not quite sure what it means for their holdings going forward. Would you be taking a bit more of a cautious stance right now or not? Are you still positive on the outlook for the market?
Well, I focus on the price, and right now the market's telling me not to be overly cautious, that it's just a bump in the road, and we've had a couple of days of pullback. Net last week we were unchanged in the S&P and positive in the tech sector. So you have to look at the price action. I know we always have to have a healthy amount of skepticism with what happens in politics and policy. But if you focus on the price, I think that will get you a little bit more confidence. I'm not just optimistic, I'm optimistic about the opportunities. There's always going to be opportunities in the markets. Markets aren't good or bad. They're not, I don't need them to be up or down. I just want them to move as a trader, and there will be those opportunities. I think right now being bullish, I remain bullish until things change. I think the U-turn that we saw in crude oil today may be a bottom in place. I was surprised, not necessarily taken totally by surprise, that we went and took out those lows from a couple weeks ago, and the lowest levels were posted overnight since April. So 2-month lows, but then we had a higher close. So a big U-turn there, and I think there's been healthy concern about what's going to happen in the OPEC meetings, which are at the end of the week. But oil's already off 10% off its high. So I think we're at a pretty key level here. 65 on a weekly basis is important to me because that was the previous high that we had in January and the previous high that we had in March. So that was a double top. Then I'm looking to see how that acts as support on a weekly basis on the downside. So I think the oil sector offers good reward to risk at these levels, and I like Exxon in particular here around the 80 level.
Outside of oil, you already answered my next question because I did want to ask you about oil. Again, there seems to be a bit of volatility in the oil price ahead of that OPEC meeting, as you point out. So it seems like you're looking perhaps for opportunities in oil. What about outside of oil? Are you looking at opportunities elsewhere?
Well, I was taken a bit by surprise by the downturn in gold. I thought that it had put a bottom in place, and the fact that it held above 1,300 psychologically was somewhat important. But you could see how it acted as a pivot last week. When it went below that, it was look out below, and gold ended up losing about $22 on the week last week. I think the dollar is the focus right now, and we had a spike in the dollar last week, and it's hanging around this 94.95 level. So it'll be interesting to see what happens from here. But when the ECB came out and said that they're not going to raise rates for all of 2018, that took the bullish bounce that we had in the euro currency out, and it dropped. It took off about 10 or 14 days worth of upward movement in one session. It just voided all that. So we'll have to wait and see what's next there. But I still look at the same paths for the markets, look for equities to continue to move higher, and let's see what happens with the dollar. And if the dollar can stop going up, that could be a catalyst for some other sectors that haven't performed.
All right, fantastic. Alan, on that note, we'll leave it there. Appreciate you joining us as always, though. We'll look forward to talking again next week. Thank you. Alan Nuckman there from Agora Financial.